All right, guys. I'm going to go ahead and start doing just a short market update. What's up, Timmy? TF Duo, thanks for joining. I know this is an unusual time for me, but I think I'll just try to get a couple more morning streams in. Just while it's boring, I kind of just hang out in the afternoon and the evenings. Usually I'm up pretty late, just trying to catch some trades at the, it's kind of this time frame around 1:30 a.m. Pacific Standard Time. Where some trades are pretty good setups, but that's just for scalping. Yeah, guys, so basically you can see that we're continuing to break down from my golden parabola. Of course, you know, all trends have to end at some point. We had a nice run where we did get in on this higher low at the bottom of the market here at Alpha Commission anyway, but then at AR, of course, you know, we did get in just a little bit later, as I did join as an owner there somewhere in this time period back here. And of course, you know, Bitcoin does have these big periods of consolidations followed by big pops. So we are hoping that even though the parabolic nature of this chart is breaking down as we are coming in to that macro resistance, where you can see the tops of these markets just getting heavily rejected at these trend lines, which I did warn you about. You know, setting off alarm bells for us to basically maintain that golden parabola above 113K. Otherwise, we're going to be on high alert, and anything under 109 probably would just be violating the parabola. It'd be what we call in trading a change of character. And whenever you get a change of character on a chart, it's always worth noting. It's always worth having it just screaming in the back of your mind, because, you know, very strange things can start happening when you start changing the character of a setup here. So yeah, this run has basically ended. We're looking for a pullback into what I think will be a dead cat bounce on the macro. Now, a lot of guys are talking about a super cycle. I'm not personally of the mind that we're going to get necessarily a super cycle. I do think that we could have a truncated bear market, and perhaps one that's even overstimulated with liquidity, kind of the same way that we got during COVID. The same players are basically in charge. So, you know, I wouldn't put it past them to try to do a V-shaped recovery off of whatever type of dip we do, and also to try to recover the dip faster as we head into the midterm elections, which are going to be super important to Trump, right? So, you know, basically everything is on the table. And then as we go into the end of the year, I think that it'll be a little bit more clear how the Fed is going to approach liquidity and adding liquidity, and how tight are things in the banking system, which there are a few problems right now that they may need to help out with. Those things could just come together, you know, with the government perhaps reopening, with you know, some type of an agreement with China. You know, something could come out of this that just gives us that last hurrah, right? The blow off top of the market. And, you know, whether you call that a dead cat bounce or whether you call that the top of the market, it doesn't really matter. We've kind of gone the full length of the full 4-year cycle. A lot of these systems, you know, just macro wide, are getting exhausted and needing pullbacks. And so we are going to be very open-minded to the possibility that there's not much time left in this market. Now, if we go by historical statistics, we could get an extension into, you know, maybe even into January with altcoins. And we've seen Bitcoin do some crazy things, even like a 4 or 5x just in a month. So again, I'm not looking at this as the end of the market. I'm just looking at this as a change of character, where we've fallen off of the parabola. And as we're kind of creeping down here, I can see that we just entered the 106K range, right? Again, you know, my warning was that if we lost 113, just to be on high alert. Under 109, I'm not sure why anyone needed to be in this market. And then, of course, under 107, I'm just going to look to see where that next bottom forms. Now, the good news is that we do have the 300 EMA. I know, guys, a lot of people talk about the 200 EMA, but it's really the 300 EMA that we catch ourselves on. The traditional markets use the 300 EMA quite a bit. And so while, you know, a lot of good things can be said about the 200 EMA, and I love 200 EMA squeezes in particular, when we do catch ourselves, but the only way that you push up into a 200 EMA is if you're caught on something lower, which is typically the 300 EMA. So you can see back here, we caught ourselves nicely off of the 300 EMA here. We had a higher low off of the 300 EMA, and here we actually had a V-shaped recovery. If you zoomed in, you'd probably see a power of 3 right on the 300 EMA. And same thing back here, you can see that this higher low actually wicked right above that 300 EMA. Here we tapped right into the 300 EMA, and here we had a higher low right at the 300 EMA. Of course, these were the 2 entries that I gave you guys in AR for your Bitcoin swing trades. And I really didn't give any other entries for Bitcoin in terms of like a macro swing, except for those 2 to AR, and I think that they were spot on. We are coming into potentially another opportunity like that. Now, you know, as this market gets, you know, pretty fully matured, all right, we can't expect that it's necessarily going to hold, right? Like, you know, we've been tapping on this parabola quite a bit, and we're going to be starting to press our luck the higher up we're buying. But, you know, is buying somewhere around 100K or maybe, you know, in the 90s better than buying at 126K? Yeah, you know, and so if you're going to take a chance, and if you were really enthusiastic about the market up here, then if you're going to take a chance anywhere, well, better down here, right, than up here. So, you know, again, this is how we control our risk, by just looking at what has been happening in this market. And then, of course, we're going to strategize a potential entry. But we do need to see a kind of bottoming pattern like we have back here, a bottoming pattern that we have back here. And I just don't see it yet, guys. I just see this distribution, and I'm just not super confident. Now, we had a chance to make a V-shaped recovery here, which occasionally we do make as we go super parabolic, but I'm just not seeing it. This is looking like a shoulder that's slopping over. And so personally, again, under 109K, just me personally, I'm just totally de-risked, right? To my personal risk threshold. I do have a couple bags left, but it's even questionable why we have that. Thanks for joining, guys. Young, Dumb, and Broke, Tom, Timmy, TF, Pat, Duo, CJ, nice to see you. Guys, I'm just doing a short market update. Usually I upload these ones online, and then we can have a community chat after that. If I jump over to the weekly, you can see that the 300 EMA does roughly correspond to that 50 EMA. Of course, when we do lose the 50 EMA, this blue EMA over here, and then we backtest it bearishly, it's pretty much game over, okay? And so we're actually significantly above that 50 EMA, and you know, while we can see quite a harsh squeeze going on here, let me turn off the drawing so you can see it a little bit better. You can see this is a very heavy-handed squeeze, guys, okay? You can see a very heavy-handed squeeze going on here. It's about 8 weeks after my my early warning death cross, right? Which I've never seen anyone else use this early warning cross. So far, I'm the only one who uses it that I know of. But yeah, we basically have a time period between 1 to 8 weeks where usually something pretty nasty happens in the market after that cross. And while I was hoping it was just this one and we were just going to go super parabolic, you know, it played out once again that within 8 weeks, we just came smashing down. And yeah, this squeeze is continuing to push on the downside. This looks like, you know, it looks like it just wants to bottom off of that 50 EMA on the weekly, or perhaps even squeeze below it. So I'm going to give it the benefit of the doubt if we get into that 100K area, where we may have some setup around that 300 daily EMA. But you can see the MACD under 117. It's not looking great. You can see my neutral point, the custom neutral point that I programmed myself here above 109.5 is what we need to get back just to get neutral looking. So that's a good place where I'm going to be looking for that squeeze between the 50 and my neutral point. And then we do have a high up here. If we do have a squeeze that could potentially push up to 130, and should this thing just go super parabolic into the last hurrah, should all that liquidity from the Fed, should they just do the cuts and, you know, the back end liquidity releases, and should the Treasury do its shenanigans? Should China release some liquidity? Should there be a deal the government comes back online, you know, all that good news, if it all just kind of starts trickling in towards the end of November, we could have a great November, a great December for Bitcoin. Alts would definitely catch up by December, and then alts could just go screaming for like 2 months, you know, into potentially January, and then I think we'd be really pressing our luck. I really haven't seen an extension like that beyond the typical 4-year cycle, beyond that couple months there. So that's your hopium to the upside. The downside, of course, is that it could be all over, basically underneath the 90K, because if we do violate this 50 EMA on the weekly here, even if we get a pity bounce to my neutral point and then we get a rejection, we're probably going to come down to this bearish control zone. And again, like any back test underneath that 50 where we get locked under that 100K, it's probably going to end up breaking back down underneath 90. And then where would we be looking next? At the 70s, maybe even an overshoot, right? An ABC correction down to the 50 to 40K or worse, okay? That would be just very typical on Bitcoin. Let's see, I'm about 11 minutes into this video, so I'm going to just go ahead and take a look at some short-term stuff, just because this recording is going to go online as well, and maybe this is relevant to some of you guys out there. But if you just wanted some daily hopium here, I've now shifted gears from the weekly over to the 4-hour, and on the 4-hour, you can see that we do have a falling wedge within a falling wedge. Now, falling wedges are bullish patterns, and so if you just wanted some hopium, okay, like you need something to keep your hope alive. Well, we do have 1, 2, 3, 4. Now, the fourth wave typically gets a little bit of an overthrow, so if you do have a little bit of a pullback and then recover above 105, okay, I could say we could dip as low as this 102, maybe even down to 100. Like this could be the move into that 100K zone, right? That we were looking at, that 50 weekly EMA, okay? That 300 daily EMA, that could be the move if we do get this breakdown. And then if it recaptures that, you know, basically 105K, this could end up setting up what's basically called a cup and handle. Here's your cup, here's your handle right here. That's going to have a measured move, the same measured move as this falling wedge, this little baby falling wedge right here that could get us a breakout on this bigger falling wedge. And then we'd probably get some type of rejection somewhere in that 113 area. If that ends up being just a lower high on the system, sayonara, guys. Like, I'm not sure where we're going to go to next, but the floor's the limit, okay? The floor's the limit. And, you know, but if we are able to hold the apex of this falling wedge, which is going to be a bit deep, okay? Because this is not the most narrow wedge, so it's going to be a bit deep. It's going to be in those low 90s. You know, if we don't retrace further than the apex of that wedge, this is going to still be a valid pattern, and we could see a significant bounce. Now, the deeper we go, the worse off that's going to be, and we're still going to be locked under that 113 if we get into that those low 90s. So I hope that this isn't the setup that we see. I hope we get a breakout and then a shallow back test, preferably above that 105, basically above the shoulder over here, 103, okay, like at the lowest. And if we are able to get that shallow breakout, then we're setting up an inverted head and shoulders here, as well as having that bullish falling wedge. And the measured move off of this shoulder is going to be effectively 125K. So there's your hopium, okay, guys? We are in a bullish falling wedge within a bullish falling wedge. And the only problem is, of course, that this is a very sloppy formation. And sometimes these sloppy formations kind of slop over before they find their footing. And so this could, you know, this has all the hallmarks of like one of these sloppy wedges. I'm even reluctant to call it like a real falling wedge. It's kind of like a slop over that gets rescued somehow by something in the market, okay? But they do have the same measured moves, and you can see that this one just went, you know, right on its way. And if we're going to have basically a larger formation of something like this back here, then absolutely we could just do that. And I would say if we are able to take out 126, your alts are going to go crazy if Bitcoin starts taking out its all-time high. Bitcoin takes out its all-time high, it's going to imply that we're going to have bigger moves. If we go back to the weekly back here, we can see that we do have just super critical low volatility. And so if this is going to be the fake out move and they recover that 50% right here, which is currently at 109, approximately 250, then any little dip down that then gets above 109, 250, it's going to have just a hair of a bullish bias. And that hair of a bullish bias off of bullish expansion. Okay. Sorry, for those guys who are not familiar, I have a volatility index in the background of my RSI here. That's these blue areas here. And we're seeing extreme volatility contraction, which means that price action is probably going to go into rapid expansion. And we want a bullish bias when price action goes into a rapid expansion so that we rapidly expand to the upside as opposed to rapidly expanding to the downside, which would be a little bit nasty, right? That's why I can be a little bit reluctant in this area, because these big moves, they come off of those low volatility moments when we start grinding to the upside. We had a little bit of a bullish bias here. This thing really started to expand on volatility. This one started to expand on volatility right here across that purple line, right? And then boom, to the upside, boom, to the upside. Again, like we don't want to be pointed down when this thing crosses my purple line here. All right, we want to be pointed to the upside. The good news is that volatility is all the way at its extreme lows. And what we have seen in the past booms on price action is that it really takes its time, right? To just kind of grind up there, We're on the weekly time frame, so it could take its time. It could take a couple weeks. Like it could do a nosedive right now, head down to 100K, start building up some structure, maybe even in the mid 90s. And as long as it starts building up bullish structures from there, our bias is probably going to come down a little bit for where bulls get back into control, just because everything is going to start consolidating around that new floor that it puts in. And if it can create a bullish bias within the next couple weeks at that floor, then when this volatility expands past my purple line, okay, that's when just price action is just going to boom in whatever direction we're pointed in, okay, frankly speaking. All right. And so we have a couple weeks to probably build in some structure that's going to take us home one way or another, to heaven or hell, guys. All right, guys, I think I'm going to wrap it up there. This has been about a 15-minute video. Again, just for the downside, since I really didn't talk about it too much, I don't want to get overly bearish just yet. I've already put out all of my warnings. And then here on the 4 hour, we are a little bit exhausted. We are in an area where we can start just starting to pivot to the upside. Even if we do have another drive down, we are getting a little bit exhausted there. Here on the daily, we can kind of hang out just a little bit longer. Yeah, I'm really reluctant to call this one. We may have to check back in on it. So, to the downside, I would say just pay attention to this pattern right now. Here we have a shoulder, a head, and a shoulder. We also have just a fake out, right? But then we have a breakdown. If we're not able to break out of this pattern, all right, and we just bump our head on that 109, like I said, well, the measured move of this pattern is basically just a range duplication to the downside. And you could see that we could easily find ourselves at the low 90s. 93K, 94K is going to be that measured move. And then on the CME chart, the professional exchanges, right, the Chicago Mercantile Exchange, we do have that CME gap at 92K, right? So that would fit in line with filling the CME gap. And then we would hope that they're just filling that and going, or that they're going to use that gap as support professionally. Perhaps some of these, traditional markets need a little bit of cooling off as well. And Bitcoin is just leading the charge to the downside as a more highly volatile asset. But by the same token, it's not like the stock market is really bearish or anything. And if the stock market is going to find its floor, maybe Bitcoin does before the stock market, because Bitcoin's breaking down before the stock market. Maybe Bitcoin starts to break up before the stock market, and the stock market just makes another higher low, right? So again, we're going to stay open-minded. We're traders, right? We're not fortune tellers, and also, we're not just moon boys or doom boys. We're just looking for opportunities. The warning has been out there for under 113. Definitely, I was de-risking under 109, and as long as we're hanging out under 109, I'm going to stay that way and just look for a floor to be put in. All right, guys, that's your alpha for the day. Stay safe and happy trading.